Good morning and welcome to the Market Opening Show. This is our collab show between Business Today and India Today Television. It's 9 a.m. and we are here to get you all the market opening action. But first up, let's take a look at what's hot in corporate and financial world. Indigo flight chaos continues as over 650 cancellations hit passengers nationwide. DGCA gives a 24-hour extension with time till 6 p.m. today for CEO and COO to reply, even as the airline says 95% connectivity is restored and full operations will stabilize by December 10. The US team led by Deputy USTR Switzer will visit India from December 10 to 12 to discuss tariff issues. Reports say the talks won't amount to a formal negotiation round, but both sides are aiming to make strong progress toward resolving tariff concerns. Starting today, NSE rolls out a new 15-minute pre-open session for equity derivatives covering stock and index futures. The window runs from 9 a.m. to 9:15 a.m. with order entry, matching and buffer phase, settling a single opening price through a call auction process. It's a blockbuster week for primary market with 13 IPOs opening this week, including Wakefit's 1,289 crore rupees issue priced at 185 to 195 rupees per share till December 10, and ICICI Prudential AMC IPO now priced at 2,061 to 2,165 rupees opening on December 12, alongside Corona Remedies and other main board offerings as well. Good morning to all our viewers. We are heading into another week now. Of course, remember, after 2 straight weeks of winning action, and we actually did see the 26,000 mark getting scaled last week, we're again looking at some more action to take place this week as well. Let's straight away, however, go across to my colleague first before we look at the market action. According to reports, a US trade delegation led by Deputy USTR Rick Switzer will now visit India from December 10 to 12 for talks on tariff issues. While meetings are not a formal negotiation round, but both sides are now hoping to make strong progress to resolve whatever is the remaining trade concern between the two nations. I'm now joined by Karishma Sudani to share with us more details on the same as well. I think, Karishma, this is another step forward when we talk about the ongoing trade talks, and that's what the markets are also clearly keeping a keen eye out on. What would this negotiation be about, and would this mean we are now inching closer to the finalization of the trade deal between US and India?
Sakshi, very interesting, the fact that the whole crux of this meeting, which likely is again not an official round of negotiation, but just to kind of finalize and put a final mastering on the first tranche of the deal, and it's definitely important and paves way for both the countries to come on a common conclusion, because also Commerce Secretary is also the former chief negotiator from the Indian government side, had mentioned just last week that before the year end, they at least wanted to do away with the reciprocal tariff imposition by the US on India as their first tranche of the whole BTA. But when I was speaking to a couple of analysts yesterday about this, they told me that because it's a deputy team being led, of course, it does has important officials. The major decisions will still happen in the Oval Office. So this, and the fact that this is not an official round of negotiation, yet another round of just final mastering, which happened October when our Indian delegation had visited the Washington just before Diwali. Yet in 2 months, not much officially had been announced. So this could be another round of saying nudging each other or asking for concessions to each other.
Absolutely. So the talks continue, even though the major decisions will be taken by the top leadership there. Let me also actually come to the Indigo story. Since, Karishma, you've been tracking this very, very closely. Seems like mayhem and chaos continues for the 7th straight session as Indigo crisis refuses to ease, with over 600 flights that have cancelled on December 7th alone as well. Do help us understand what the Delhi airport has issued as fresh advisory recovery. Of course, will there be further delays and cancellations even today? And this is coming despite the company also saying that they are in control of the situation.
Well, it's actually important to understand that Indigo flies about more than 2,000 flights, close to 2,250. In fact, if we look at the domestic sectors, let alone, they have officially shared that they have been able to restore operations up to close to 1,600, and that is because of the extension and the exemption that DGCA has given to them on FDTL norms. They've also shared that their on-time performance has close to reached about 75%,
Sure.
and things have more or less been operationalized across airports, and they'll continue to until they are, of course, until December 10th, where they'll be able to fully get back to their operations as it was existing before the crisis exploded.
Absolutely.
However, Delhi Airport and other airports have warned passengers because there could be still operational issues, last moment cancellations. They're still not in full capacity. They're still not operating in full capacity, and that will take another 2 days for things to normalize.
Absolutely. Thanks a lot, Karishma. Do keep an eye out on it and get us all those developments on Indigo front as well, so that we can keep all our viewers updated on the same. Let's now go across to our market experts. We have, of course, Shail Bhatnagar, our consulting editor for markets. And of course, we also have Ajay Bagga, senior market veteran, also joining in. But markets have opened at 26,142 at this point in time, slightly on the back foot at this point. Shail, how do you see the market session opening? What are the key points that you're keeping an eye out on today? All right. We'll try to get back to Shail.
Wonderful
Yes.
Monday morning that pans out on.
Yes, Shail, please continue. We can hear you
on
now.
Dalal Street. Metals, private banks, auto, and the digital space in Dalal Street will show strength as far as the long side trades are concerned. On the overside, on the oversold side, you have PSU banks. Therefore, all dips which you see on SBI, Bank of Baroda, Canara Bank, and Indian Bank are opportunities to get back on the long side as far as those wonderful trades are concerned. And in the IT space, strength comes in the form of TCS, emphasis in particular, HCL Technologies, as also from the NBFC space, Sundaram Finance and old world favorite L&T Finance and AB Capital are looking good. All told, please consult a financial advisor before you get into these trades or you get into these stocks.
All right, we have just the right person to talk about the markets. Mr. Ajay Bagga is now joining in, senior market veteran. Warm welcome to you, sir. Good to have you with us right at the beginning of the market opening. To help us understand, how are you assessing the market currently? Last week we, of course, climbed to fresh record high levels. How are you assessing? Will this momentum sustain? Are there going to be, again, stumbling blocks that the markets have to face? And what is it that the markets are clearly looking at as triggers that could probably propel it to a different orbit much higher from here?
Yeah, great to be on your show again, Sakshi. I think the biggest trigger for the market this week will be the visit of the US trade delegation. So if any good news comes through there, or if there are indications of an imminent trade tariff relief, the markets could really rally very strongly. What is the setup right now? We have underperformed the emerging markets by about for about 14 months by about 25%. Normally, when we underperform for such a prolonged period, the next 12 months are pretty good. So we are historically sitting on the cusp of a catch-up trade in India. What will be the catalyst for that? There could be two things which are visible right now. One is, of course, some relief on the US trade side. Second would be the union budget. If there is a strong stimulus coming in the union budget, that will help. The RBI did the heavy lifting last week, so that is done and dusted. We are expecting another rate cut from the RBI in February because the real interest rates stay very high. Look at, say, a developed economy like Japan, where next week we are expecting a rate hike, but still that will take them to 0.5% versus an inflation of 3%. So there's a huge stimulus embedded in a major economy like Japan, whom we are competing with to overtake and become the number third, while we are paying a 5% real interest rate. So that is a very big drag on the economy. RBI is aware of it, and we expect more stimulus there. But I think we are sitting on the cusp now. Will it be a year-end rally or will it be a pre-budget rally coming in January? That we have to see. A lot will depend on the US negotiations this week.
Also, do you think the FII's return is also hinging on that trade deal being finalized between the two countries? They are again on a selling spree. Last 3 days, again, we've seen about 6,000 odd crore rupees of sell-off from the FIIs. What will bring them back and bring them back sustainably?
Yeah, we have to see the rupee stabilizing. That becomes a very big factor. And a 5% drop in the rupee this year has not helped in terms of retaining or turning back FIs. FIs, if you look at where are they going, they went into Taiwan, Korea, China. We saw money going into Japan as well, much cheaper markets valuation wise, and they have pure play AI plays. So whoever was trying to diversify out of the Mag 7 in the US, the magnificent top 7 stocks, could find players. Like the Korean market has become so concentrated. Today, Samsung and Hynix are 31% of the Korean market because they both gone. Samsung is up 80% plus. Hynix is up more than 120%. The entire market they have raised by about 60% this year. So these are the beneficiaries. For FIs to find India attractive, valuations have to go down. Now that could be if the market fell sharply. That has not happened because retail flows have held up the market. So what is the second option then? Your corporate earnings have to grow and the rupee has stabilized. I think we'll have to watch for these two. Corporate earnings are coming back. We are seeing a plateau happen in September. From here on, we should see a gradual recovery, and the rupee stabilizing will be very critical.
Absolutely. Are there any sectors, segments of the markets that are offering value at this stage also to you, Mr. Bagga? Where are you finding confidence in the markets?
I think the rate sensitives will do well. You are seeing monetary space for the RBI to cut rates further, except real estate. Real estate surprised that it didn't contribute on Friday. But I think the banks, NBFCs, what Shail was mentioning earlier, banks, NBFCs look well positioned for the imminent turnaround in the markets. IT would be a contrarian bet. Some amount of interest is returning. Not a very loved sector, underappreciated, underowned. So it sets up for a contrarian play as the IT allocations increase next year. Our IT companies should benefit.
Absolutely. Let me go across to Shail again. Shail, what are the top stocks you're watching out for right now? I can see Eternal up by about 1%, despite that block deal taking place.
Yes.
Any other stocks that you're watching out for closely?
Well, Sakshi, I think there is, despite all the bad news, some sort of relief coming into Indigo. It opened sharply lower. If you look at how the system was set up in the morning, 5168 for you, the low was 5050. But this is the 6th, 7th day of pain. Ideally, if the market were not expecting Indigo to ride through the crisis, you would have seen a 10-20% downtick, but that's not happened. So that is for long-term shareholders of Indigo, seems to be a bit of a relief. But Eternal all the way, 1.5% higher. Remember, we've seen 340, 350 on the stock in the month of November, October. So this shift seems to be a swing trade in the making. Record highs on National Aluminium, which we've been pointing out for a while. And amongst the top gainers, you see Linde India 2.5% higher. This is a win for short-term, long-term shareholders where the CFO has resigned on a very long case with SEBI and SAT. So that's a big win. There is some victory happening in Transformers and rectifiers, post earnings, this was beaten black and blue, now 2.5% higher. Broadly, markets are flat. Sakshi, let's see how the first 15 minutes lapse.
Absolutely. But Mr. Bagga, what's your take on Indigo per se? We are seeing more and more brokerage houses cut their targets, even though maintaining a buy call on Indigo. This has been a monopoly, wealth-creating stock in the aviation space in India. A lot of investors have believed it and kept this stock in their core portfolios for the long term. Time and again, on the profitability front, the company has proven its worth. But these fresh concerns, are they, a lot to ignore? Should one just keep an eye out on the long term and move beyond the current troublesome times? How should one tackle Indigo at this point?
Yeah, Sakshi, I'm not able to speak on particular companies, but overall, airlines as a sector is an avoid. Very high capex, and they have to get so many parameters right to do well. When you have a market like India with so many diversified consumer plays available, you really don't need to get into a very, very highly regulated, very capital intensive, and dependent on global moves in aviation fuel prices, very not able to price properly, having so many types of charges coming in from parking to airport charges to all kinds of things. Very difficult to make a company in a sector like this make money consistently. We have seen so many companies flounder in this sector. So I would say it's an avoid as a sector without commenting on the company. As a consumer, what we all saw, I think that was something very unpleasant for the country. It's a critical infrastructure. We should have so much capacity built in that there is a failure rate of 5% in takeoffs, and still you have enough alternatives. So I think there a lot of focus will now come in building up competition and breaking this duopoly or monopoly situation.
Absolutely. Meanwhile, viewers, as we were marking out Eternal for you, the large trade has been executed. 5.3 crore shares have exchanged hands. This is a total of 0.54% of the total equity. The deal value is 1,535 odd crore rupees, and the block deal price was 290.4 rupees per share, is what we are given to understand right now. Eternal's moved to the top spot, over 1% higher in trade. That's the parent company of Zomato, as you see in front of your screens, at 295. So keep that stock in your mind, into your watch list throughout the course of this session today as well. But let's also talk about, this entire new age tech basket, Mr. Bagga. How are you assessing this entire story? Moving beyond the two, frontline stocks, Zomato and Swiggy, that we've always talked about. This quarter also showed some more strength even in the below the surface stocks. A lot of other companies that were reeling under a lot of pressure throughout this year, say for instance, Mamaearth, Honasa Consumer or Nykaa, a lot of these other companies, delivery also started to perform as far as the earnings are concerned. Are you also looking at a broad spectrum of these stocks, as a potential, buy list for your clients as well?
Yeah, Sakshi, how to look at these very highly valued. So valuations are so high that the execution has to be spot on, and you are paying for the next few years of growth already in the current prices. So if you're not invested, you can wait on the sidelines. There will be one or two winners coming out in each of these segments, and people will have bragging rights, but there'll be a lot of failures. So on a risk reward, as an old-fashioned investor, I'm not very clear on this. And I think we are in the late stage of this present market up move. So over the next 2 years, you are going to see a big correction in the US markets, especially on the technology side. And then these companies will also get questioned. So overall, survivability is an issue. They are having to raise money continuously. One or two of them will become very big, and they will be the new Amazons or the new Googles, and what came out of the dot-com crash. Those companies will give bragging rights to investors, but for retail investors, I think these are valuations are just too high. You are paid for next few years of growth already, and they have to execute to perfection. Any of that tick mark goes away, you will lose money. So not a very good risk reward scenario, I would say.
Okay, well, thank you so much, Mr. Bagga, then for being with us on the show. We are running out of time to wind up the show now. Thank you. Always appreciate your presence and your understanding of the markets that you pass on to all our viewers as well. And thanks a lot, Shail, as well, for being on the show. With that, viewers, we are going to be wrapping up. 26,145 on your screens. There's a mild downtick, 0.16 odd %. Will this convert into green by the end of the session today is something that we will track for you very, very closely. Time for a short break, but do stay tuned. Market coverage will now continue on India Today at 3 p.m. for you, but on Business Today throughout the course of the day as well. Thank you so much for watching.